What if I told you there was a record-keeping system so simple that it takes about 15 minutes to set up, requires zero ongoing effort, and could save your housing allowance during an IRS audit? I'm Seth from Shepherd's Wallet, and today I'm sharing what I call the Sharpie Strategy, the set-it-and-forget-it system that makes housing allowance documentation completely automatic. Imagine the IRS comes knocking, demanding you defend your housing allowance benefit. It's the nightmare scenario that pastors dread. You could have done it all right, requested an official designation in writing from your church, have the documented resolution in your hand. You could even have a robust comp analysis to justify the fair rental value of your home. But if you can't prove you actually spent money on your housing expenses, your housing allowance, it goes bye-bye. And it's all fully taxable. You could easily get slapped with thousands in additional taxes, penalties, and interest. So that's where today's strategy comes in. By the end of this video, you'll have a system that makes housing allowance record keeping so automatic, you'll never have to stress about documentation again. Let's be honest about how most pastors handle housing expense records. You've got receipts stuffed in your wallet, some in a kitchen drawer, maybe a few in your car's glove compartment. You tell yourself you'll organize them later, but later never comes. Then December rolls around and you're frantically searching through old bank statements, trying to remember whether that $250 payment was for the water heater repair or for something else entirely. Sound familiar? Here's what makes this terrifying. During an IRS audit, I think I spent about $15,000 on housing. Doesn't cut it. The IRS wants receipts, bank statements, and clear documentation. If you can't prove your expenses, you lose the entire housing allowance benefit retroactively, plus penalties and interest. Not that we could ever dream of the IRS being used to put pressure on religious institutions or their leaders, but regardless, probably best to be prepared with airtight documentation. The Sharpie Strategy solves this problem with brutal simplicity. What is the Sharpie Strategy? Is it marking your receipts with a Sharpie after you input them into QuickBooks? Is it writing, "Help me with my bookkeeping" on your forehead with a Sharpie, hoping an accountant will see it and help you out? I'm genuinely curious to hear what you think it is. Put your best guess in the comments below. Here's how the Sharpie Strategy actually works. Step 1. Open a separate checking account specifically for housing expenses. I recommend a free checking account from a credit union or online bank. No fees, no minimum balance requirements, easy to use smartphone app, the whole 9 yards. Free checking accounts are everywhere. Step 2. Get a debit card for that account. Now, waiting for that debit card to come in the mail will take longer than 15 minutes, so maybe my promise at the beginning of the video was a tad overstated. Nevertheless, the next step is where the Sharpie actually comes in handy. So, take those 5 to 10 business days of waiting to go get yourself a good one. Step 3. Take out your Sharpie and write "housing" on the debit card. That's it. That's the secret sauce. Don't write it on the signature pad, the mag strip, or the chip. Everywhere else is free game. Get as creative as you want to. You could even draw a doodle of a house on it if you want to. For extra credit, stick a piece of Scotch tape over it so it doesn't wear down in your wallet. Step 4. Use this card for all housing-related purchases. Mortgage payment, utilities, home repairs, lawn care. Everything goes on the housing card. The magic? Your monthly bank statements become your automatic housing expense documentation system. No more reviewing piles of receipts. No more shoebox filing systems. No more December panic. This system works because it leverages your existing habits instead of fighting against them. You're already using a debit card for purchases. This just makes it intentional and organized. Here's what your house expense documentation looks like at year end. 12 clean bank statements showing every housing expense with merchant names, dates, and amounts. If the IRS audits you, you hand them a stack of statements and say, "Here are my housing expenses, organized by month." But here's the real genius of this system. It prevents the mixing problem that gets so many pastors in trouble. When you use your regular checking account for everything, it's easy to overlook legitimate housing expenses or accidentally claim personal expenses as housing expenses. With a dedicated account and the discipline to develop the habit of using it, that risk shrinks considerably. The Sharpie on the card serves as a constant visual reminder. This card is for housing expenses only. It takes the guesswork completely out of what goes where. Now, this housing account is actually part of a larger system I teach called the 4-bucket system. Here's the idea. You have income coming in from various sources: church W-2, housing allowance, 1099 income from weddings and funerals, additional income from book royalties or side gigs, you name it. Pastors get around when it comes to bivocational work, and kudos to you for diversifying your household income. Problem is, though, each of these income sources have different rules, different taxes, different record-keeping requirements. Trying to separate it all out at tax time can be like filling a swimming pool with various hoses, then trying to figure out which hose contributed what after the pool is full. Huge headache. Would not recommend. Instead, imagine if you used each hose to fill its own bucket first, before dumping it into the pool. It becomes so much easier to figure out where everything came from. The good news is, this doesn't have to be super complicated. Even the most complicated bivocational pastor typically only needs 4 buckets. And I go into detail about the full system in my upcoming book, Shepherding Your Finances, available for pre-order, link in the description. For now, though, we're going to talk about one bucket in particular, the housing bucket. Here's how it works in practice. Most households have the luxury of just depositing their paycheck directly into their main checking account, but for pastors, this is a no-no. Instead, we're going to provide some separation to make record-keeping way easier by putting your church paycheck into your housing bucket, which is actually a dedicated checking account. From this account, you pay all your housing expenses, including things like mortgage or rent payments, property taxes and insurance, utilities, maintenance, repairs, etc. Then, any money left over can be transferred into your main checking account and included with your household finances. This creates perfect separation and automatic housing expense tracking that makes your life so much easier come tax time. Let me walk you through the practical setup. First, choose the right account. Look for free checking with no monthly fees, no minimum balance, an easy-to-use smartphone app, and a debit card. Your existing bank may even let you open up an additional checking account for free, making life even easier for you. Next, transfer enough cash in to cover your next rent or mortgage payment. Make sure there's still enough in your existing checking account to pay your normal bills for a month or two while you get this system set up. Also, contact your church's payroll and have them direct deposit your salary into this new checking account. Now that the account is funded, track down all your regular housing-related bills and set them to autopay from this account. We're talking mortgage and rent payments, utilities, electricity and gas, HOA dues, home and internet and landline phones, everything that's a housing expense, autopay it from this account. Once you get your debit card, take out that Sharpie and mark the card so you know to use it only for housing expenses. This isn't just cute, it's functional. Every time you pull out that card, you're reminded of its purpose. You go to Home Depot to get some weed and feed, use the card. You buy an end table at Home Goods, use the card. You get the picture. Finally, keep an eye on your main checking account. When it gets low, transfer the leftover money from the housing account into your main account. If you've really got your housing expenses dialed in, you can set this as an automatic transfer so it happens consistently every month, like a new paycheck. You can start using this system immediately for small housing purchases, utilities, maintenance items, home supplies. Build the habit before your first big expense to ensure your system is solid and you don't get overdrawn. So what about situations that don't fit neatly into this system? Like online payments. Most utilities and mortgage companies accept debit card payments, but if they don't, you can establish an ACH connection directly to the new checking account using the routing information and account number. It'll show up on the statement just as if you had paid with your debit card. What about cash purchases? If you must or prefer to pay with cash, write yourself a check from the housing account or use the ATM with your housing debit card, keeping the ATM receipt as documentation. For mixed purchases, say you're at Target or Home Depot buying both housing items and personal items. Ask the cashier to split your order. Pay for the personal items with your regular card and pay for the housing items with your Sharpie card. And finally, large purchases. For major home improvements, this system really shines. Every payment to contractors, every trip to the hardware store, every permit fee, all on the housing card, all automatically documented. Just be sure to transfer money from your main account before making any big purchases like that so you don't get overdrawn. The beauty of this system is that maintenance is minimal. Here's your entire year-end process. 1. Print your monthly statements from the housing account or save them digitally. 2. Add up the total expenses. 3. Compare to your housing allowance designation. 4. File the statements with your tax documents. That's it. No receipt sorting, no category coding, no spreadsheet updating, and no QuickBooks. Unless that's your thing, in which case, hello fellow nerd. Isn't it nice to have your bank do all the work for you? Pro tip, at year end, also print a summary report showing total deposits and withdrawals. This gives you a one-page overview of your entire housing allowance benefit. Plus, you also have all your ministry salary reported in that same account, making it easy to estimate your quarterly tax payments. More on that in a future video. Here are some of the most common objections I hear when I share about this system. But Seth, I already have a system that works. If your current system actually works, meaning you can quickly, easily, and accurately produce complete housing expense documentation for any time period, then you've won. Stick with it. But if you're like most pastors I work with, your current system probably has gaps that make you dread tax season, and that could cost you big time during an audit. What if I forget to use the right card? That's why we use the Sharpie. It's a visual reminder every time you open your wallet. And if you occasionally miss an expense, no big deal. Just transfer that amount to your main checking account to create a record that can be reported with the rest of the expenses. Is it really worth opening another account for this? I think it is, and I'll tell you why. By no fault of your own, the IRS has placed this complicated mess into your lap. The choice before you is not simple versus complicated. It's which complications are the least complicated to you. If tracking your housing receipts seems simpler to your situation than adding another checking account, then by all means, stick to the receipts. But for most pastors I work with, the ease of automating record keeping is well worth the minor clutter of having an additional bank account. This isn't ultimately about record keeping, it's about stewardship. When you handle your housing allowance with excellence and integrity, you're demonstrating faithful management of the resources God has entrusted to you. Good systems create margin for ministry. When you're not stressed about tax documentation or scrambling to find receipts, you can focus your mental energy on the work you've been called to do. And here's something many pastors don't consider. You're modeling financial wisdom for your congregation. When church members see that their pastor handles money intentionally, with systems, it reinforces the stewardship teaching you do from the pulpit. Ready to implement the Sharpie strategy? I've created a step-by-step guide that walks you through choosing the right bank account, setting up automatic transfers, and optimizing the system for your specific situation. You can get that guide, plus access to a housing allowance calculator tool to help you optimize your benefit, by joining the Sacred Capital community. For just $15 per month, you get access to our growing library of financial tools, monthly live Q&A sessions, and a community of pastors and financial professionals who take biblical stewardship seriously. Click the link in the description below. Next week, we're diving into SECA tax reduction strategies, the 3 legitimate ways pastors can reduce their self-employment taxes while staying completely compliant with IRS rules. Along with the housing allowance, this is another strategy that can save you hundreds or even thousands annually. But first, get your housing allowance documentation system set up. Grab a Sharpie, open that account, and start building the habits that will protect your housing allowance benefit for years to come. Remember, every dollar you save through proper housing allowance planning is a dollar that can go towards debt reduction, retirement savings, or increased generosity. See you next week.